Okay, hi guys, this is Simon with Trade and Perform Coaching, and we are going to take a midday trade review of the trades that we did this morning in both CL and in ES, and I'm going to take a minute to review it so that we can have it fresh in our minds and be ready to execute on it again on Monday since I'm not trading this afternoon. So before I get started, let's read the disclaimer. Where is that? Here we go. Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve the profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, so now that the fun part's done, let's get into the work. Okay, so let's start. Well, we're going to start with ES and roll into CL. So when we came in for ES this morning, okay, this is what we were looking at overnight. Okay, so if we look at the first at the 240, we are clearly we are at the top of the range, right? It appears that we're trying to break out of the top of the range, but the PA was sideways overnight, even on a 240, and we're holding above the 20 period. There's nothing special about the 20 period other than it is a de facto alternative trend line for me. It's just a tighter trend line. It tells me that we are in principle still pushing up. I guess it would look something like the closer trend line would be like this. That's the closer trend line. But the 20 period, generally when we're above the 20 period, I'm looking for more longs. And actually in ES, I'm always looking for more longs. And the reason for that, someone asked this morning, is because you'll notice the constant look at the number of up green bars and the constant U-turns that ES makes. And the gist of my ES trading is to find where the U-turns are going to occur, grab my initial 2 points, leave the trailers for the larger wins if possible. But what I care about primarily is locating first from volume profile charts and charting in general where my locations are, and then reading the PA. So coming into the day, going down to a smaller time frame, you'll see in the morning that I should not have gaps there, which means I'm on es.d. Let's fix that. So there we go. So we can see overnight we are interested in what's going on in London. Okay. So here is London's open. Here is US Open, right? And so what you might argue in there is that we're trending down, but we're really not. What's the reason why we're really not? If we go back and look at the prior day's session, even though we did roll over and we're pushing down, right? We're still inside prior day's range. And what's the total range on London session? We had a high approximately 23.94 and a low of approximately 23.88. The Globex low got set. Where did Globex low? Why is Globex low looking funny here? Am I on the wrong day? I am. No? Yeah, I am. Please forgive me. Here, let's do that one more time. I'm sorry. Let's shift this over. Everyone makes mistakes. I'd rather making a video than I would doing my trading. There we go. Okay. Now we have both. We have all 24 hours there. We can see what it looks like. So the first thing that you see, looking over the 2 days, this is London range prior day. This is London range last night. The low on London, right, which we set early in the London session, was at 23.84 1/4. The high prior to open was at 23.91. Is that right? Actually, it wasn't even that. It was 23.88. So London had a grand range of 4 points. Right? We all know that 4 points is a very narrow range overnight, so we're not expecting the market yet to do anything exceptional. That was different from the prior London session. Prior London session had a high of 23.94 down to 23.88, 6 points. So when we go through our morning checklist, right, the first thing we ask, has the range expanded? Both from the Asian session and from the London session, we had a contraction in range overnight. That tells us immediately to expect more likely to expect a narrower range day than we were getting yesterday, right? Second thing that tells us that is that we know statistically Mondays and Fridays are the narrowest range days of the week, right? And we generally, those are the days where if you look for balance, it doesn't have to do it that way, but I would generally anticipate having a balanced day on those days, right? So that was the setup coming into the day. So now let's go and see what we actually ended up with. So when we come in and we open, here's the chart for the day, and we open up and there's no zone in here, right? My resistance, my earliest resistance is 23.91 to 23.92 area. 23.91.75 was the volume point of control from yesterday. I would normally expect that to get tested somewhere in the 24-hour session and in the RTH in most cases, and I expect an initial rejection out of that 23.91.50 or wherever that volume point of control is from the prior day. The primary target was, and I wrote this note before the open, I'm looking for responsive buyers near 84, right? So I wrote that when I was up here. I know that we have a narrow range in here. There's nothing for me to do. And then I said it needs the help of price action. So let's take a step back. What does price action mean? Is that I'm looking for either some type of formation in the candlesticks, reflecting on what the decisions the traders are making, and I'm trying to contrast that between what the S&P 500 traders are making, how they're making their decision, versus how the broader market is making its decisions. So in the room, the objective was try to get in near 23.84. First time in, we kind of just flushed in, and I was originally at 23.84 1/4. Then I bumped to 23.84.50. I could not get a fill on either side. Now this is really I do draw all those lines manually, Sam. Sam asked if I put these lines on, and I start with a volume profile chart and I manually map it out. This is not automatically set, right? So this is an important area right here, guys, right? Because of two things. If you look at the PA, right? So what we've been working on is really catching the back end of this move where we get these pushes out, right? That's what the big effort has been, because we're already very good at identifying trade location in the room, right? And we've always gotten this initial 1.5 to 2 points, assuming we can get filled. And in the pre-market, I noted, right, move away from the 23.86.50, focus closer to the 23.84. Now, looking back on it in retrospect, you could have taken the 23.86.50 for 2 points and the 23.84.50. But that is a function of a very low volatility market, right? When as soon as the volatility expands, you're going to end up with zones that constantly look, if it's too early in the day and the rotation's not there, you can end up with them getting busted, although this area getting busted was significant yesterday, obviously, and it came back up to be resistance on the backside. But even on this push in, right, so this is a great contrast. This is what a zone looks like when volatility is very high. And in prior days, the price action we've been getting has been, instead of getting this sideways consolidation that we've gotten down here or that we got this morning, we've been getting this V-shape push. But in my trade plan, the first time into the zone, generally, unless I'm very, very confident or way up on the day, requires me to cut my trade size because my focus is on these longer consolidations, right? And trying to capture these longer consolidations for a push out, right? And it's trickier than it looks. It works great, but it's trickier than it looks. So let me catch back up to the room. So any questions to this point about what we said? So we identified two key things before the market ever started. We knew the range overnight was narrower than it had been the prior day. That let us know to expect less volatility, and we know statistically Fridays and Mondays have narrower ranges, and it argues for balance most of the time, which means we want to be on the edges, and psychologically we're going to be forced to take a trade sooner than we want to because there's going to be less energy, right? All of that added up before we ever got started, right? So we get started. There's nothing to do here. We We're going through CL and NQ trades, but there was nothing to do in here. The entire range here is 3 points, and this is a no-go for me at 3 points. There's nothing for me to do. Let's go back over to today's chart. It still came in the same way. You'll notice there's no zone here. There's nothing. The objective of the day, I was hoping for an early push down and then a drive up towards the volume point of control, and then if we could consolidate up here, that we could finish up and come up and fill the gap at 95.25, and that was my ultimate upside target, and still is my ultimate upside target, right? So we came in. I was limited at 84.25, then I bumped to 84.50. I got neither one filled. Market came around, right? But now I've got the price action that I'm looking for, right? And you can see, first of all, we come down and we set two things. We've one tick below Globex low, and we do it on on a 5-minute tick divergence, which is a very strong sign. 5-minute tick divergence has been working consistently over the past months. It's been a high odds trade. We're trying to get this, right? If anything, I wasn't aggressive enough on this second time in here. I should have actually pushed trade size, and that's the first thing that'll go in my notes. And I noted in the room in real time, right? This line, when we were in the room, guys, right? I said, hey, look, tick is improving. That means the broader market, the New York Stock Exchange, issues on the New York Stock Exchange are improving as sellers are trying to press into the lows. So I want to pause here for a second because this is important for me, right? What this tells me is I picture football teams or soccer teams, or really rugby or football works the best, right? You have a line of scrimmage going on here, right? And what this is telling me is that these guys, the defense, are making a hard push to get to beat the offense back, right? And they finally pushed as hard as they could, but the amount of energy they had to push with declined, right? So that you got to follow this story a little bit. I'm trying to paint a picture of what it looks like. People got tired. They made a really big push to push to a new low, and they failed and closed back into range. After they made this push down on tick divergence, there was nowhere left for them to go. This is the group of people that covered immediately, that recognized, hey, we couldn't break the low. Get me the heck out of my short. Maybe they were short from up here. Maybe they were short from down here. It doesn't matter. They recognized that they could not push, right? This was in effect, right? So I want to take y'all back, guys, a couple days. This won't make any sense to anyone who's watching the video that's not in the room normally, but this is the same as this trade, right? It was earlier in the week when we pushed to 2400. It has to be over here. So Daniel, you'll remember this. That's the same as this bar right here, right? They were pushing, 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 and I said as long as we can hold the 50-60 in this area, right, the bulls still have a chance. And I said on this bar, remember I was long, I scaled into this, and I closed the position right here. I did not short, but I did close out. Why did I close out? These guys are exhausted. These guys got exhausted. They made an extended effort. You can see the tick never improved. It was negative all the way through here. And this was the bar that told me, hey, we're done. So now come back to over to today, right? Come back over to today. This effectively told you the same thing. They pushed, broader market improved, they're exhausted, the deal's done, and then the next thing I said, right? So go step by step because I want to remember, I want to go through what I was thinking. I said, look, these guys are done. We're long here. I wasn't aggressive enough in my sizing, but we're long here. I'm long here. And I said, I need to see a close behind 86.50. Close behind 86.50. Quick backside test with an inability to close behind the 50 retrace there, right? Confirms. Close back out of range, if you're going to call this tiny little area range, right? And then what happens? So everyone who pressed their short here, these were the weakest hands or the smartest, depends on how you look at it, and they bailed. This is the second group, and this is finally the panicky group who said, oh my God, they're going to break it to a new high. Let me get out, right? And what's my goal? My goal is to press it to either the gap fill or to Globex high. Here's the 50-60 back. All right, see this here? We've just done another 50-60 back, which is an indication if we can hold this. So now, if you're long from down here, you don't want to see this 50-60 violated, right? In a picture-perfect world, you don't want to see this 50-60 violated for a continuation up. There's nothing that says we can't close back here and come back and retest 85, or we can't even make a double bottom and still go to 91. It's just, in my mind, the way I want it to look perfect, which is what I'm striving for, is to have an image in my head that gets matched on the screen so I can recognize it very quickly in my head and go, hey, this is what happens when I see this pattern. In this pattern, this 50-60 holds. It never closes below here, and we go to the 91. Okay, so this is normal price action, and what are we getting? Balance. Top of range rejected, bottom of range consolidated, and pushed back in. This is normal and balance. What I'm going to need to achieve this 91 is to gather up more shorts to give me juice to get to 91, and I'm really going to need help in a slow market to get to 95. This is most likely, if it gets here, going to be an end of the day push where we've built in more shorts. People are, because think about what less seasoned traders are thinking. Less seasoned traders are going gap down, half gap, inability to fill the gap, roll lower, and here is their target, 81 to 79 or lower. That's what they're thinking, right? But these guys who are trying to push for this have the same problem that I have trying to push for this 91 or 95. There's no energy. The only difference between the guys who are trying to push for the 91 versus the 81 is that the market's in an uptrend. NQ is at a new high for the year, and they are fighting the tide of longer term consistent momentum and the constant nature of ES, which is to push up from pushes down, right? So all that's going through my mind. So did we achieve our goals this morning? This is the last part when I'm doing homework. I go back and I wrote down, and it's funny because I was speaking to one of my coaching clients. I was speaking to Brian, and I said, Brian, I want you to write down what your goal is, what you are trying to achieve, so that we can go back in terms of what setups you're hunting, right? We are hunting here. We are hunting other traders making mistakes. What is your goal to achieve? What are your setups, right? So that we can look at the end of the day, and whether you made profit or loss, I don't care, right? What I care about is, did you see your entry? Did you execute? Did you have the proper stop? And did you scale along the way? And did you leave a trailer? And if you didn't, right? So we have that process down. We know exactly what we were looking for. So if you did execute or you failed to execute, either way, now as a coach on my end or as a trader on your end, right, you can look at your process and go, this was my process, A, B, C, and D. I expect balance. I know it's a narrower range. I'm looking for a push down to get a response back up. I'm looking hopefully for a second or third test of the low where they push hard to break it and they fail. I'm not necessarily looking for the first push in. If I can get it, that's great. I identified the 86.50 was not enough rotation down, pushed towards the 84, right? And then the last piece is where I would criticize myself today is when I recognized this one tick of the low, I only got about half of the total contracts that I wanted to have on. And on this bar, I simply should have said my stop's one tick below the low and press full size or greater on this trade, because there's very high odds that in this environment, top third of the range, that I could have pushed out, which is exactly what we did. So if I made an error today, that's where I made my error. And now I'm trying to I've gotten all the way down to a quarter of what I did get on, right? My stop is literally one tick or two ticks below the low here. I forget what I set. And then my objective is to scale out the majority of what's left at 91 and leave a small trailer for 95 if I can get it, right? So, but the P&L doesn't matter. What really matters is, did I go through my process? Did I keep my emotions in check? Did I execute the way I envisioned executing when I drew it up on paper beforehand, just like a playbook for a sports team? And I think we did all of that. So, where I find traders have difficulties, they want either the zones to matter, or they want to be able to read the price action, or they want some magical combination of bars. But the truth of the matter is it's reading everything. It's understanding that Fridays are usually balanced, right? It's understanding that, look, if this market, if this bar down here had done what we did down here, where we just, well, not even that, it was this the other day. Where were we? If we did this today, where we just pushed down and then pushed right up, I'd have had absolutely zero. But you know what? This violates one of my prime rules, which is unless I get tick divergence. See how there's no tick divergence on this push? The low bar of the day was the low tick on the day. Now, some people will argue that that negative 1,000 tick is a sign of exhaustion, but I've seen it go both ways. But the important point behind that is for my process and for my trading rules, when the angle looks like this, and I don't have 5-minute tick divergence, there's no way for me to take that trade. What I need is a second press back down, and as it turns out, because the market was so slow, that second press came down here on the second day. It took a full 24 hours later, or whatever it was, 18 hours later, and I don't have a process in my trading process to take this trade. So again, when it pushed down, even though we had this identified as, I'm pretty sure on the 10th we had this identified as location. Actually, I know we did, because I always have a zone right off the low, right? So even though I had this identified as location, again, because I didn't get the second press down, and again, because I didn't have tick divergence into the low, I did not capture this P&L. Some of the people in the room captured that P&L, but I did not, right? And the reason for that is because my trade plan wants me to capture my focus, and I shifted the focus, right? Before, the focus was catching those, but I couldn't get the risk reward lined up properly. My process has shifted from catching those straight knives falling in to look for consolidation and trapping shorts and capturing these pushes out, which is exactly what I executed today, right? So that's ES. Does anyone have any questions over ES that don't require significant explanation, like overall underlying philosophy? Did I cover it pretty well, guys? This is the time to ask the questions. I'm pretty sure that's exactly what we did, and that reflects in my decisions and my actions reflect my process today, which is good. And what I want everyone to understand is it's not about the lines or the zones or anything else. It's about the process. You cannot repeat in the market without having a fixed process and doing it over and over again. So no questions? Oh wait, Randy popped up. Okay, great, Randy. So now let's go to CL. That was the other request. So let's do CL. Got to find which screen has CL on it. Thank you. CL is missing in action. Let's see where we have it. Is that CL? Sure is. Okay. So let's start CL from scratch again, because this won't make any sense to anybody if we don't rebuild it step by step. Okay. So the first question we have on the checklist for the day when we come in is CL trending. Is it three questions? Is it trending? Is there strong momentum, right? Characterized by, the momentum is characterized by an angle of greater than 45 degrees. I'm not sure that that's 45 degrees, but I want it sharp. I'd actually like it when it looks like this, sharper than that, but at least this, right? So we have a couple ways of figuring that out early in the day, right? So the first thing we want to note, just like in ES, is we're going to come and ask the same set of questions. We walk in the morning, here's 2 a.m. roughly. Let's see. 2 a.m., London open. Roughly London high, okay? 8 a.m. U.S. pit session opens at 8 a.m. Let's go mark that off. Okay, there. So here's London high, London low. That's pretty much all I care about, except I do want to take a quick peek at a bigger picture, right? And the first thing that I notice is that we're not only are we within London high and low, we're also within yesterday's trade range yesterday. So there is no momentum here. First thing. So that means my momentum indicator, right? So this is a custom indicator that I use, and this is totally worthless. I can throw it out the window. It does me no good in a balanced market. So I now have my answer. Not only we're in balance, we're in extended balance, and we're building energy, right? And then I can go look at the bigger picture really quick from there, and I can see on the 240, right, we're above the 20-period moving average. Again, same in ES. That gives me a quick reference. It's a quick trend line. Buyers are in control at this particular stage on the 240. And before we got this leg down coming into the day, this is 8 a.m. So everyone can see what it looked like then. So there's 8 a.m. We're back above the 20 period, and you'll notice again, even though we dipped our toe below the 20 period exponential moving average, which there's nothing special about that. Again, it's a visual reference, but you can see that it's starting to flatten out on the hourly, right? And then we can see on the 15-minute that we're completely flat, meaning there's no momentum, right? So immediately I'm going to my balanced CL playbook, which says I'm looking for setups from London high and London low. Very simple, right? And then I'm looking to see if those will break and get an impulse move on the break. I'll cover that in just a second. So now let's go back to a 5-minute bar. So when we're in balance, 50-60s work extremely well. And if you'll notice a couple things, we opened up immediately. We tested right up to London high and immediately rejected down. Right now, had I been heads up early in the morning, that would have been sufficient for me to actually take a short right out of the gate with a stop right above here. Again, my objective, so balance has a lower odds of success than the momentum setup, which I'm not going to cover today. But so what that means for me is I'm going to lower trade size than what I would do on a momentum trade, because my win rate's closer to probably, off the top of my head, 68 to 72% of the time I'm going to make money here. Momentum, the trades have been closer to 85 to 95% win rates on the first setup of momentum, and probably closer to 80% on the second setup and third setup on momentum. Okay, so I did not take this trade, but I had a second opportunity. Why? We come back up, retrace the 50-60, right? And then in the room, right, what I explained was we've already rejected off of London high. The natural target off a rejection at the top of range would be to come back and test the low of range, right? So what does the market do? It follows it step by step. First of all, on the bigger picture from London low to US high, we come back to the 50 retrace and retrace back up to where? Back up to the smaller 50 retrace from the rejection of London high. I'm still keying off of, from importance, the rejection of London high, and I explained there's no easy way to do this, but there's two sets of stops. Does anyone have any questions to this point, guys? I'm pretty sure this is a mirror image of what we discussed in real time this morning. But I'm going to take a pause to give a second for someone to ask. Going once, going twice, going 3 times. Okay, so we are in, and I said, look, this is a small retrace. This is small. There's no energy in here. And then I am not clear that we won't come back up and break London high or retest this high. All I can do is measure risk, and I have 2 ways of doing that. We're non-momentum. This was the bar I shorted on. On the close of this bar at 47.93, I could choose to put my stop 1 or 2 ticks behind this wick, which has a higher odds of getting stopped, but a lower stop. You have to choose. There's a trade-off, right? Or I can put my stop, adjust my trade size accordingly, and put my stop back here. In balance, I am more inclined to put the larger stop, the stop back here. And in momentum, I'm more inclined to use the tighter stop and take more shots if I need to, because the RR is huge, right? So entry was here, stop was 1 tick, so I think it was 48.08. So I had my stop. I'm pretty sure my entry was 47.90 or 47.90, 89 or 47.90, which meant I had a 13 tick stop, I think, on this trade. I don't recall exactly, but that's pretty close, right? So once I make this decision and I'm in this trade, my hands are off the mouse. I don't have a choice. But I understand in my head and in my playbook that just like if this was a sweep right, sweep left in football or whatever sport you follow, right, that there's going to be a certain pattern that's likely to follow if it's successful. And if it's not successful, it's going to get blown up and stop or be a loss, or however you want to frame that sports analogy. Okay, so the next piece behind that is, let's make sure I'm flat on everything. I am. Okay, so what happened? We immediately break down. I immediately take a scale into this. I forget the sequence of scales, but I promise you I scaled, drag stop here, then I drag stop to break even, and I think I covered my last covers right in here. I don't remember anymore because, again, I don't expect it to cascade out of balance and trend down. It turned out that if I would have stuck that trade, it'd have been a very nice trade, right? The entry was here at 95 and it rolled all the way down to 35. So it was a potential of a 60-tick trade, but I'm not thinking that when we're not in balance. I'm always thinking defense, protect capital, and squeeze a few dollars off, move stop to break even and see what they give me. And this was even if I had stayed in these trades with these wicks that were in here, that would have been enough for me to cover anyways. It's highly unlikely that I get this trade down here. But, right, and this is important, then we break. So as we're coming to London low, right, I don't take it automatically. What am I looking for? I'm looking the inverse of this bar up here. I'm looking for some kind of reversal and tight stop. What happens instead? We bust and clearly close below London low. Everyone who went long up here realizes they are now in trouble. This is also below prior day's low as well. And people get panicky. What's the difference? There's no energy yet here, right? And we're still above the 20 period on the 240. The time frames are not lined up to give you a strong momentum move. And without news, there's almost no way that's going to happen. Okay, so are you talking about over here, Sam, on this? This isn't Globex, that's London high, but the short wasn't there for two reasons. First of all, the market, I wasn't even at the office yet to trade this, number one, and I would have traded that, but I don't want to trade straight into the low and straight into the high because I don't want to predict what people are going to do. I want them to give me a hint of what they're going to do, and then I want to manage that trade so that they give me a very tight stop and let me manage that. I generally just don't take it straight into the low or straight into the high. You can if you want. There's a win right there. I bet it's closer to 50%. But then what you'd have to figure out is if you just shorted going into the high, right? What's your stop going to be? Are you going to use 10 ticks, 20 ticks, 30 ticks? And the answer to that goes back to your process. What you have to do is go back and look at all the London lows and all the London highs, figure out what the average stop is, and I'm sure there's a ratio between range and stop. I need evidence. That's my methodology. I need evidence that there's a seller present or a buyer present, and I wait for that. And then if I can get that stop in and within a range that fits my acceptable risk per contract, then I take the trade. And totally willing to accept that that bar gets busted, I take the stop. And I try to make that as tight as possible. Okay, so, and it's for exactly the same reason that I wouldn't have shorted straight into this. I wouldn't have bought straight into this because my stop here, right, in order to survive this long, and I've made it profitable, right? So look at the ratio. If I went long 47.63, I had to take almost 30 ticks of heat, more than $300 a contract. Right? I had to wait an hour, and then I've only gotten from 47.63. I've barely been able to manage 10 ticks of reward. I don't like that risk reward. And CL can rip in one direction. It's a mean, nasty trade if you don't know what you're doing. And I do want to say that about CL and be very clear. The purpose of this is to help people learn. It's not to call out trades and say, hey, look, this is the trade. The point is your process and your understanding of how the process works. And this is what I coach to when I'm in one-on-one, and I cannot reiterate it enough. Your process is what matters. Your risk control is what matters. It's very easy. Most people lose money day trading. The gross majority of people lose money day trading. The success rate is somewhere between 25% and 1%, depending on the market, long term, of people pulling money out of the market. And my encouragement is have a process, do less, learn more, right? And don't be in a rush to kill it. You don't have to make that much money to actually have a phenomenal return in futures, but everyone tries to make that return in a week and they get killed. So that's the reason why I just don't take it straight into London high or straight into London low, is this reason exactly. So on this point, we've clearly closed below London low and prior day's low. This is the first test back, even though it didn't technically touch. I was looking for a push back up and then a rejection bar. This was my rejection bar. I shorted right here. Okay, this is my second trade of the day. Shorted right here. Went stop, right here, covered right into this, right? I forget how much I made. Wasn't anything phenomenal, right? But again, the reason for that is I knew that I could be getting caught on the edges on a non-balanced day. My entire objective in CL trading is to make my stop to break even as soon as humanly possible, and cross my fingers and hope I end up on a few trades. I'll just get lucky and it'll just sweep for me and I'll make a lot of money. And then the rest of the time, I'm happy picking up 40, 50, 60, 80, $100 a contract. That's gold to me. I'm totally grateful for it. I'll do it all day long. Okay, so then we came back up, and then Bill, this is where you asked me whether I would short this or not, right? This area right here, is that correct? I'm pretty sure this is where you asked me to short, and what I said was that I would like to have, instead of the doji, which is an indecision bar and can get traded through pretty easily, I'd rather have a red bar. And so when this pointed out, I did not take this trade, right? And the reason why I did not take this trade is at this point we are trapped. We are trapped back into prior day's low, which was prior day's pit session low, which was over, where was it? Is this right? Let me make sure I got this right. London, Asia, 9 a.m. Why am I having a hard time with this? Hold on a second. Where's prior day's low? London, prior days, 8 a.m. low was right here. Okay, so there we go. So we'll get rid of this bar. Now we have London low, prior day's low. We'll color that yellow. Okay, and then so at this point, my hesitation on this was that we were trapped back into prior day's low at this point. I would have rather seen the rejection, which it did. This bar, this red bar, I did not take the short. I was already done on the day. We already nailed ES. I've had a good day all the way around. I got an NQ trade in. But this bar closed below prior day's low, and I was willing to take a shot. So where was my stop? Right above this, one tick above this, right? I'm pretty sure it was either here or here. I forget which one I did. At any rate, you'll see we pushed down, right? We came in again, did not get stopped. And then I said on this push down, I would be very quick to cover this. If I had shorted it, I did not. I'd be very quick to short it, to cover it, because you're running into two things. First of all, if it had been weak, it would have never gotten back above prior day's low, and we would have rolled. Secondly, there's no energy. There's no impulse move on any time frame, right? We just barely peeked our head, and an impulse move, when we break, by the way, looks like this, guys. I mean, it is freaking horrendous. It looks like you get this, 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 this. Like it really breaks. There's none of this, let's dance around and figure out whether we want to go lower or higher stuff. It's a break. And I love to see this. I don't care if I catch one thing, because what I'm going to catch is then my momentum trade will kick in. It'll pick up. I will nail that first overbought location, and I will usually get a very nice trade out of it. It's a very high win rate. And that's my favorite trade, and that's my highest leverage trade that I use for trades. But that was not the situation today, and I already pulled 2 trades out of CL, which is about what my goal is on a balanced day, is 2 to 3 trades. And this got compromised, and I would write in my notes the reason why I would not take this and did not take it was to trap back in. It left me susceptible to exactly what happened, which was the push back into range, right? Back above one. And you'll see, you can see the psychology going on here, right? People got underneath. Weak hands got bearish or skittish, whatever you want to call it. Trap back in. This is I'm pretty sure this was an attempt at the 50 retrace. Let's look. Yep, sure was. Attempt back at the 50 retrace. Trap back in for a second time. Push back into range. And now we're just dancing at the bottom of London low, and I have no idea where it goes from here. I have no read from this, nor do I need one. So that was the CL trade. Brian, did you have any questions? You're the one who asked me. Actually, I was going to go over the CL. Because if that's it, I'm done. Because if you don't have one and no one else has one, I am done. Okay, we'll just cover that in our coaching session then. I don't have anything else. Guys, if for those of you who are watching the video, I know some of this without context of being in the room beforehand, it's hard to catch. If you'd like to see how you read price action as a professional does, how you use the rotation size, how you use other traders' mistakes to turn them into your edge and pull money out of the market, you're welcome to join us in the room. I think it's a pretty phenomenal deal at $95 a month. That's less than two ES points, right, for the entire month. And I'm pretty sure the room pays for itself. With the quality of education is fantastic. I know I'm patting myself on the back, but that's feedback I've gotten from other people. My goal is, this is important, so the goal is not to turn you into a billionaire. The goal is to turn you, to stop the boom-bust cycle that most traders go through. They open an account, they blow it up, they refund. Some people lose a lot of money, some people just lose small accounts. To turning the focus from how much money am I making to how do I get a process, how do I follow that process, how do I adapt the process as the markets are changing, and how do I move from a boom-bust trader to a consistently profitable trader. It doesn't happen overnight. It takes time, it takes work. But if you're in it to really make money long term, right, and you're not in it to gamble or try to knock the lights out of it overnight, there's nothing wrong with doing it, right? But what I teach is how to end that boom bust cycle and how to get consistent over a day-by-day basis. And it's all about process, emotional being able to, under stress, being able to make good decisions. And what allows you to do that is having a process that you can follow so you don't have to rely on your emotions every single time in making a decision and trying to read every little single tick and make a decision as to what everyone else is going to do every moment of the day. Anyways, I'm done, guys. I'm going to enjoy my Friday. John, thank you. John said it's the best deal ever. I appreciate it. If you could tweet that out, that'd be even better. Yeah, Sam, if you learn PA, you sure can. You can, I mean, there's plenty of people that trade CL and ES and all the markets. You know, a European market is pretty liquid. I don't, but you sure can. I've got 2 twin babies at home, and my sleep is precious. So, but yes, you can, and plenty of people do. So, anyways, I'm going to shut it. I'm going to shut this webinar down. I don't think anyone else has any questions. If anyone has any specific questions, you're very welcome, John. John, I think you had a very good week, and you're kicking ass on the bonds as well. Congratulations. Tip of the hat to you. I will. I said I would send you that book. I will recheck why you haven't received it. And Randy, you've done very well this week, I think, too. So, nice. And anyway, that's all I got, guys. I'm going to take care of my wife. She's sick. So I will talk to y'all later. My door's open, tradeandperform@gmail.com if anyone has any questions, Twitter, StockTwits, or you can leave a comment on YouTube. I will upload this, and I will talk to y'all later. Have a great day, guys. Let me kill this.